Is my rate locked? Can I break the lock? I get these questions all the time. I'm Khalid Murad, your mortgage broker, and let's talk about rate locks. I help you understand the mortgage process so you can make smarter, confident decisions with your home purchase. A rate lock is relatively simple. You're reserving funds with the lender at a certain rate so that you can purchase your home. Say you want to buy a new car. You find that perfect 2004 Runner. It fits your nostalgia, carries your family, goes off-road, and its non-interference timing chain means it's durable for many hundreds of thousands of miles. So you go to the seller and you say, how much? 10 grand. Okay. I need to go withdraw that money from the ATM, so I will be right back within 30 days. You go get your money, you get held up a little bit, you show up on day 31, and you say, here's my $10,000, get me that suite for running. But unfortunately, the seller now says, it's $12,000. Why? Because I had some expenses and I agreed to 30 days to holding it. Now it's day 31, I can charge you a little bit more. This is exactly how a rate lock works. You are reserving funds with a lender who's going to sell that loan in the secondary market or to their investors so they know exactly how much money they can make on your loan. Say you want a loan for $400,000 and due to your credit score, your down payment, etc., you're going to get a great rate at 7%. Now in a couple of years, if we're down at 3, 4, 5% again, and I watch this YouTube video, I'll cry a little inside. But say that lender is going to make money on your loan at 7%. So they're going to offer you 7%. Now the market changes daily, even in the middle of the day, due to global events, the stock market, other things like COVID. So they're reserving these funds for you for a limited amount of time. You are locking those funds in so they can sell that loan. Now, say that the market gets way better and you could qualify for a 6% interest rate. Well, they're not going to give it to you because you have locked for 30 days, which is the usual amount of time, with that lender for 7%. This is where a broker does a little better than a loan officer for a direct lender. So say you're working with a loan officer for a direct lender. You're locked in at that 7%. They can't do anything about it because they have one lender that they answer to. You have those funds reserved with one lender. Now a broker can say, okay, I found you a 6% somewhere else and we still have time in your closing. We can move your loan over and start anew here at that 6% and still close on time. This is where working with a broker, such as me, is better or more advantageous than working with a loan officer for a single lender. Now, why would we have to move your loan over? Why can't we just start again or get a new lock? Because you can't. Because you can't break the lock. If you break the lock, most lenders will penalize you by giving you the worst rate for the last 30 days. This penalty is because they have locked or reserved these funds for you. They could have sold them to somebody else. They could have gotten another loan for that $400,000, but they were hanging on to them for you. Now, here's a few caveats to the rate lock. One, it can be extended. If you're like me and you work with a lot of lenders consistently, they'll often reward me with free extension days for my borrowers. So say your loan is taking a few days extra to close, which thankfully I usually close all my loans early, but say you need a few more days, well, you can extend your rate lock, but for a fee, because that lender reserved those funds at that rate for you, so they're going to charge you a little bit extra to extend that rate lock. If you're like me and you work with a lot of lenders consistently, they often reward me with free rate lock days for my borrowers, so oftentimes I can extend it for free. The other thing is you can get a rate lock that is longer than 30 days. Say that you are selling a house first, you can lock your rate for 45, 60, 90, pretty much up to a year for many lenders. Although the way the market is now, you don't really want to lock that long because we're most likely in a slow downward trend. The other thing is your rate lock period can vary. In Florida, most closings take 30 days or less, but say you need a little extra time because you're selling a home or you are starting a new job and you want to lock your loan for a little bit longer to allow for a longer closing. Well, you can usually do 45, 60, 90-day rate locks. Some lenders even offer up to a year, but it's not very advantageous in today's market where we're seeing rates fluctuate rapidly and most likely slowly coming down over time. So if you have a loan that's locked and you've heard news that the market is improving, but you're stuck with that lock, feel free to shoot me a message or visit khaledclosesloans.com or my Instagram page at khaledclosesloans. And I would love to help you get a lower rate because remember, I'm a broker, so I can find you a new lower rate. But if you just have questions about rate locks or more detailed questions about your scenario, I would love to help. Put them in the comments below or contact me at khaledclosesloans.com. I'm Khalid Murad, your mortgage broker. I help you understand the mortgage process so you can make smarter financial decisions with your new purchase.